The sponsor of today's video is Webull. Simply use the link down below my description box, deposit any amount of money, and we each get 5 stocks. It's that simple, and by the way, it's limited time, so get on it. Use that link. Enjoy. Now let's get into the video. So let's talk about some dividend stocks, guys. I want to go over 3 in particular that I'm looking to buy in 2022, and I actually already own these stocks in 2021. I've owned them, well, some more than others, but I already own all of them right now. I just simply want to buy more of them. So if you guys find value, hit the like button, subscribe, check out my Patreon down below if you want all my buys, sells, call outs, morning update videos, plus more. All of that's on Patreon, link down below. And now let's talk about some dividends. So before we actually get into the 3 stocks that I'm looking to buy more of in 2022, let's talk a little bit about what to keep in mind when you're investing in companies that pay dividends. And pay attention. This is extremely important, guys, because I get questions all the time. Stas, this company pays a 30% dividend yield. Is this good? Should I invest? They pay a 10% dividend yield. Should I invest? Well, the truth is, guys, companies that pay very high dividends, we're talking 10+%, 15%, 20%. These, most of the time, these dividends are unsustainable. So you have to be careful. If you see a company that pays a 10, 15, 20% dividend yield, you should have alarm bells going off in your head because, again, these a lot of the time, most of the time, are unsustainable. Sometimes companies, they actually take out debt. Believe it or not, they take out debt in order to pay a dividend in the short term to lure you in, to lure in investors in the short term. So let's say, for example, you go on Yahoo Finance, Seeking Alpha, whatever website you use to do analysis, and you see a company has a 15% dividend yield. You're going to be like, oh, I'm going to invest in this. I'm going to buy this company without digging deeper into the balance sheet, income statement to see if the dividend is legit or not. You're not going to look into the history of the dividend. You're just going to buy it. Not everybody, but a lot of people see the 15% and they simply buy. But a lot of the time, this is short term, and they end up cutting the dividend when you buy it, when a lot of people start buying the stock. And another thing worth mentioning is you have to pay attention to payout ratio, right? You have to pay attention to earnings per share and how much they're paying in terms of dividends. So let's say, for example, a company pays or they make $10 in EPS per year, and their dividend, for round numbers here, is $5 per year. They're making $10 a year, which means they could easily cover the $5 a year in dividends, so that's going to be a 50% payout ratio, right? If that makes any sense, and we'll talk more about this later. So keep in mind the payout ratio, and listen to this. Another key point before we actually talk about the stocks here. I know we're getting a little bit deep into this stuff, guys, but trust me, this is very important. So sometimes companies hike their dividend after they had a great year. So let's say, for example, a company has a fantastic year. They make a lot of money, more money than normal on the top and on the bottom line, right? A lot of the time, they might just raise their dividend aggressively during that year that they had a very good year, knowing that growth might be unsustainable. And then once the companies go back to normal, their sales, profits, maybe they die back down, that dividend is coming back down as well. Let me tell you, that dividend is coming back down as well. And also, you got to look for companies, right? You got to look for companies that have a long track record. So we talk a little bit about what to avoid, companies that are paying dividends, with debt, high dividend yields, those are a bit shady, right? But what you want to look for is companies that have a long track record of paying a dividend, at least 10 plus years. And you also want to look for companies that are increasing their dividend over time. With that being said, let's now talk about some of these stocks, 3 in particular, like you guys saw in the title, that I own. I own all 3 of these, and I want to buy more of. So number 1, we have Intel, ticker symbol INTC. The current market cap is $206 billion. They have a 9.8 trailing 12-month PE ratio, which, in my opinion, that's very undervalued. They pay $1.39 dividend per year, and I believe, Intel's quarterly. The last one is annually, so make sure you guys stick on throughout. We'll talk about that. So Intel pays $1.39 dividend per year. That's quarterly, and that is a 2.7% dividend yield, and they had a profit of $5.16 last year, trailing 12 months. So $5.16 EPS with $1.39 dividend. That is a very sustainable dividend. Just, looking at EPS, the payout ratio on that is probably a 30 to 40%. That's solid. They have roughly a 6% 5-year compounded annual growth rate, meaning their dividend is growing about 6% over the past 5 years. That is solid, and they have 7 consecutive years of dividend growth. And like your wage, your salary, right, whatever you're getting paid, you're going to want your salary to grow more than what inflation's growing. It's the same exact thing with dividends. And we all know inflation right now is very hot, but over the past 5 years on average, it's probably not 6%, which is what the 5-year compounded annual growth rate for Intel's dividend is. So Intel's dividend is doing better than inflation. That's solid. 7 consecutive years of dividend growth, 28 consecutive years of dividend payments, meaning they're a dividend aristocrat. And what that is a company that's paid dividends for 25 or more years. And now a company with 50 plus years of dividend payment history, that's a dividend king, which number 2 is J&J, guys. They're a dividend king. They have 59 consecutive years of dividend payments, 59 consecutive years of dividend growth as well, with a 5.87% 5-year compounded annual growth rate for their dividend, which is solid. And the market cap right now is $456 billion for Johnson & Johnson, and their PE ratio for the trailing 12 months, as of now, if you're watching this video, maybe in 2022 already, it might be different, but as of now, it is 25.9, their PE ratio, which admittedly, it's a little bit too high. I would like to see Johnson & Johnson anywhere from an 18, 20 PE. Honestly, lower than that. 15, 17, that would be even better for me, but 25 is not too extremely overvalued. And again, their dividend is pretty solid. Right now, it is a 2.5% dividend yield. They pay $4.24 per year. That's paid out, I think, quarterly. Yeah, J&J's quarterly. And for the past 12 months, they've done about $6.70 EPS. So $6.70 EPS, $4.24 dividend per year. Their payout ratio is something like 60, 65%. Not too bad. So J&J stock number 2 that I'm looking to buy more of when it comes to dividends. And stock number 3, hope you guys stuck on to the end of the video, because we're going to go over one here that pays a little bit less of a dividend. Their dividend is growing more than the other 2 that we just talked about, Intel and J&J. And I think it's interesting, and I actually just started buying the stock recently. It is Activision Blizzard, ticker symbol ATVI. Let's pop it up. You guys can see this stock has been obliterated recently from $100 to 55. Now we're trading over 61 per share. Activision's market cap is $47.66 billion. They have an 18 trailing 12-month PE ratio, which is pretty good. I think that's actually a little bit undervalued here, Activision, considering they do have a lot more growth than J&J and Intel. And it's funny because Activision, it has more growth than J&J, and the PE is a lot less than J&J. That's a good sign, right? That's a good sign in my eyes to buy more Activision, right? And they pay a 47-cent dividend every year, and they actually pay this annually. I believe they pay every May, so if you own Activision, expect a dividend in May, right? They pay every May, and their yield is about a 0.8%, so it's less than 1%. And before you get on my case, Stas, this is a dividend video. What are you talking about? Well, the truth is, if you look at dividend stocks, guys, Sure, you want a lot that pay, you want some at least that pay a good amount of dividends today, 3%, 2.5, 4%, but you also want companies that pay maybe a smaller dividend today, but they're growing their dividend pretty aggressively. We talked about J&J. It has a 6% 5-year compounded annual growth rate. Same with Intel. Well, Activision has a 12.5% 5-year compounded annual growth rate. They have 11 consecutive years of dividend growth and 11 years straight of dividend payments. So with this growth rate, guys, this dividend could easily be, a 1, 2, 3% payer in a couple of years, maybe 5, 10 years from now. And their dividend is very sustainable. They did in the last year $3.37 of EPS, and their dividend is only 47 cents. So their payout ratio is very tiny. We're talking maybe 10, 15%. So overall, guys, I'm looking to buy these 3 stocks, more of them. And if I were to rank them, which ones I want to buy heavier and which ones I'm going to be buying lighter, well, I'm going to be buying Activision, probably the heaviest out of all of these, because I just started this position recently, and all you guys in my Patreon know, because you get all my buys, sells, call outs, all that good stuff in real time. Check it out, link down below. So I'm going to be buying Activision more heavy, and then Intel. I'm going to be buying more Intel, and then I'd say J&J is the last one on my priority list, because I've actually owned J&J the longest out of all 3 of these, right? Activision is my newest position. Intel I started buying a couple of months ago, and J&J I've owned for a couple of years at this point. So I'm not really looking to add too much to that this year or next year, unless it starts getting down under a 20 PE, which in that case, I will be buying a lot more J&J. But overall, that's it. I hope you guys found value, learned a thing or two. If you did, make sure to hit the like button, subscribe, drop me a comment, let me know your thoughts, and check out my Patreon. If you guys want all my moves, that's linked down below. And you could also get 5 stocks from Webull. Don't forget to do that. All you have to do is use my link, deposit any amount of money. We each get 5 stocks. And you could also get $50 from M1 Finance, link down below. Use that link, deposit $100. We each get $50. It's that simple. So check it out. I'll catch you guys in the next video. Thanks for watching. As always, keep crushing the markets. Stay safe out there. Peace out.